Hello everyone, Tommy Sandvik here with the Bull and Barrett Traders, and today we're going to cover a some marketing, ha ha ha, my brain is in the marketing right now. We are going to cover market fundamentals, market 101, about the movement of the market. So if you want to understand why you seem to always get the reversals at the wrong time, or you think something's going to continue moving and then the market just dies and you don't understand why, this is going to help you. So let's get going. So, as I indicated in my video, well, first of all, don't forget subscribe to our channel so you get updates when we post new videos. We have been rapidly posting them, and we have a lot more coming. Sign up for our newsletter, sign up, the email address to be notified when we go live and any updates on that process. And of course, join our Facebook group. We have a free Facebook group where you can get signals from any of our 9 traders on staff that we currently have. And they post a very good win rate, and we teach you proper money management, so it is a great place to be. So, as I indicated in my sort of about me introduction video, I learned to trade with a company called Maverick FX, and there were a few basic principles I took away from them that I think some people may benefit from in our group. So we're going to talk about just overall concept of market movement. So we have 2 kinds of markets, right? We have what we call a ranging market, where you just kind of get this right? And then you have a trending market. And a trending market, it goes like this, and then maybe like this, and then up, or it goes like this, this, like that. That's trend, range. Okay. So, understanding that, then you can understand that when the market is like a little ball of energy, and it takes a lot of energy to make these big moves. I mean, when you get the days where the market moves a big distance, that takes a lot of energy. And so what happens is you're either going to get, as I sort of alluded to, you're going to get a push, and then you're going to get a range. This was called the base formation when I traded. And then you get the breakout and a push, and then a range, and then a push. Okay, so this is a base and breakout sort of format. Alternatively, you can get a push and then usually get like a couple candles down, and then maybe a couple up, and whoop, you get another push, and then in a perfect world, you get 3 down, you get engulfing, blah, 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 a breakout. I'm going to fake out all the traders, so I'm going to like do this, but then I'm going to sort of break, but I'm not going to break, and I'm going to come back, and I'm going to actually do a base. I'm going to come back, and then I'm going to break out. Okay, just having some fun. So, so these are basically the ways that the market can go. Now, how does this plan? The market can't move in one direction forever. And of course, when you're in a range, if you have the market doing this, yeah, eventually it's going to break. It's going to break to the south, or it's going to break to the north. It's going to break. The market's not going to range forever either. But this is like building energy, and then this is expanding energy, right? Expelling the energy. So I'm going to show a perfect example of a trade that happened today, and I had a discussion in Skype, and I actually did a video on the spot with screencast with Jing, just to show the trader I was talking to my analysis. So we have a really interesting thing happening on the pound dollar chart. So if you go back to my zone trading, I look for points of rejection. So on the 4 hour, on pound dollar, I've got, and there's a gazillion lines on here now. I know what each of them mean, but I'll try to maybe clear it up a little bit. So here's what we had. We've got this, we had a zone, this blue zone, right? We had the blue zone. The majority of the blue zone was invalidated by virtue of the fact that the 4-hour bars are closing within the zone, right in here. So pretty much all we've got left for a possible rejection area starts right about here. If you want to be precise, I like to give a little bit of area, but and then down here. All right. So also you remember from the zone concept that the zone is still valid even if it gets taken out by one big, massive, strong candle, 4-hour candle. What invalidates is when the candles close within the zone. Then they are invalidated. So what we had happen here is this was a point of rejection. It came up, came back down, and it blew through it. Now, when that happens, a lot of the time, this zone of rejection will now turn into resistance. And so at the time that I was watching this trade, we only had this bar was going, okay? And I took a put somewhere up here in the wick of this. Let's see if I can remember. I want to say it was somewhere in, let's see, these are hourly, somewhere in here. I took the put. I can't remember. Trying to remember. Hold on. Bear with me. Yeah, honestly, I can't remember. But anyway, here's the point. Somewhere in this candle, I took a put. Why did I take a put? Because in the last bar of the 4-hour bar, last hour of the 4-hour bar, the price was above this line here. It was above this one, and that's in the previous rejection zone that just got taken out. So I figured probably a pretty good chance that it's going to close below the line. The 4-hour bar will close below the line. Okay, great. Oh, I had someone point out to me, wait a minute, hold on, we're at the monthly support line. Well, if you're at the monthly support line, you're looking to take a call, right? So went out to the monthly, and he was right. At the time we were down here. You can see very clearly, yep, that's a support line. But I don't trade support lines. I trade rejection zones. And to me, the next point of rejection on the monthly would be this zone down here. So we got a ways to go before we get down there. Now, that being said, I was pretty confident that price was going to turn into a range. It made a big move. Remember what I talked about with the energy? Big energy, huge energy. Okay, now what's it going to do? Well, the chances that it's going to continue downward are relatively small, but I still felt like it was going to close below this line. So one thing I pointed out to this individual was I said, well, here's the thing. If you actually look at the hourly, 1, 2, 3, 4, 5, 6, 7 bear bars in a row. 7. That's a lot. I mean, that's 7 trades. Oh my gosh, you could be 7-0 if you had caught that. So that is 7 trades. down without any retrace. So really good probability. Ultimately, I'm wondering now if I actually took a, no, it must have been a put. But anyway, I knew that it probably wasn't going to push significantly lower because it had not based or retraced at all. It was 7 bars of a bear candle, bear candles, quite a movement on the hourly. So I figured most likely it was going to go into a base, which it actually did for 4 bars. You know, it formed this little range here. And look, 1, 2, 3 rejections off this zone here. So up here, up here, up here would have been an opportunity. Anytime price was above this line, you had the opportunity for a put, which this individual was saying was a bad idea because you were at the support line. But I didn't even feel that in the immediate future it would push upwards because it just expended all that energy. I really felt it was going to form a base, because even doing a pullback or a retrace still requires energy, and then it requires even more energy to continue the trend. So if it was going to pull back and then go lower, that was going to take more energy, and given the time of the day that it was, I knew that wasn't likely. I figured. I didn't know. We never know. But I suspected with high that there was a lack of probability that it would do that. So I said, look, I'm pretty sure it's going to bounce off of this rejection zone here. So I took the trade and I won. So the interesting thing is the contrast. Look at the euro dollar. It had a big, massive bar down. So you could make the case that it's going to do the same thing. It's actually going to go down. I'm sorry, that it would base. And actually, at the time that I recorded the video, this second bar, the second 4 hour, was actually a bear, and it was pushing all the way down to this level here. But here's the interesting thing. Look at the hourly. Down, up, up. Okay, so the point is that we had 1 bar down, 1 bar up, 1 bar down, 1 bar up. So even though this was a big move, there was a built-in sort of retrace period with the move. Therefore, I actually felt it had larger capability to go to the downside. As it turns out, it didn't. It sat in a range. But I felt this had a higher probability to go down than dollar CAD did, solely on the basis of how it got to the extension that it did today. I'm also just going to throw out, there's a lot of, and this is just my opinion, I'm trying to get better at calling trades for you guys in the group. It holds me accountable and helps me take better trades, and it makes me accountable, because it really sucks when you see like 10 people posting out of the money to know that you just caused somebody to lose a lot of money. So that's unfortunate, or you caused several people to lose money, I should say. Sorry, a little tired. So but this is a very good way to look at it. I thought it was going to go lower. It didn't, but it ended up basing. But anyway, what I was saying, so people say that you can't make money in the holidays. Should you trade over holidays? Blah, 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 blah. Well, I went like, what did I say my record was? Like 17, 6, and 2 today. I was jumped on with BBITT and a little bit of Matt and a little bit of my own signals, and just everything was clicking. And we did really, really, really good. The markets were great today. Not only that, but look at the movements. I mean, the market moved today. I mean, this is, it's a decent amount for us to be able to capitalize off of. So I'm not really sure why the disdain for it. The market only does three things. It goes in one direction, it goes sideways, or it goes in the opposite direction. This is all it does. It doesn't matter if it's the holidays. If it's the holidays, it's more likely to do this. It's more likely to go do 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 do. And guess what that means? If there's a defined line at the top and the bottom, you're trading Jimmy's way. If it's trending and you want to know where it's going to stop trending, look at the zones and know that it's probably going to reject off those zones. And then when it gets through those zones, it's going to go sideways. So then you're back to Jimmy. I mean, the zone strategy is really largely a trend strategy because it's a counter trend strategy. You know, you're looking for when is a trend going to stop. And then once that has happened and the trend has stopped, if it establishes a range, then you can jump into being a range trader and trading Jimmy's way. So I just want to, put that in people's heads that this is all the market does. It does it every day of the year. It doesn't matter if it's a holiday or not. The market does effectively one of these patterns. Overall. The only other thing it'll do is like go up, base, and then come down. But the point is it cannot do one thing forever. It's always going to change. You just have to identify what it's doing. And looking at the points on the chart where you've had a change in the behavior is a good way to be able to identify in the future where that may happen. And it's a very fluid way of trading. For instance, I would now say this zone is completely gone, right? Because I see nothing in here to warrant such a thing. But now I've got this. Because we're getting a hit and a push away. So if it comes back down and tests it, I'm probably going to look for a bounce. And then, of course, if we end up all the way down here, the monthly rejection area, then that's like super high probability to the level of like the dollar CAD 2004 level that we just hit recently. Okay. So I hope you find value in this. Some things for you to think about in your trading. And I really hope to continue doing these because literally every day I'm learning something, making an observation of something, and trying to transfer that. Because you can take a base concept like the zones, only trade the last hour of a 4-hour bar, but then when you also understand where these levels are as they begin to become established, you can do great things because you will be able to flow with the market. Where I had my zone, right? I had my zone here. So we had our zone, and it got blown through, and so we established in the 1 hour, the line here. Sorry, not that one, but the line here, and then we had 3 opportunities there before it finally broke. So I did not trade those, I don't believe, but they were there. Yeah. So, okay, thanks so much. Subscribe, sign up, etc. Lots more awesome stuff coming, guys. So stick with it and share this video if you find it valuable. Thank you.